Good afternoon, everybody, and welcome to Introduction to Cryptocurrencies. My name is Bob. I'm pleased to have Dr. Jose Kawa Elvira with me. Jose, hi.
Hi, nice to see you, Bob. Nice to say hi to everybody.
We're going to cover an interesting, a red-hot topic today. Everybody's hearing about Bitcoin and cryptocurrencies a lot, and we're going to kind of look at the role, if any, of these digital assets, another name for them, in your retirement planning. And we are going to try to cover, we have a limited amount of time, but we're going to try to cover the most commonly asked questions, try to give you an intro. For some of you, it may be old hat, but for a lot of people, I think it's a new subject and it may be a little confusing. So we are going to also offer at the end an opportunity for a 15-minute, no cost, no obligation consultation that you can ask us questions and find out if this makes sense for you. So a couple of the things we're going to look at today. What is this? What is the blockchain technology that we hear about? What is Bitcoin? What are cryptos or digital assets? How are they purchased? Can they be held in an IRA or Roth IRA? Jose, other questions?
Yes. What is the outlook of cryptos versus precious metals, stocks, bonds, mutual funds? Are cryptos a legitimate asset class? Are digital assets a superior form of money? Are digital assets too risky for the average investors and the retirement account?
So those are all good questions. And I think, since we're going to make the case or try to make the case to people that cryptocurrencies are a superior form of money, I think it might be helpful if we look at a history of money.
Yeah, that sounds good. Could you please walk us through it?
Okay, so it's going to sound a little funny, but if you go way, way back, at one time, seashells and beads were considered money. In fact, in 1626, Peter Minuet bought the island of Manhattan for the equivalent of $24 worth of beads. And I would say, looking back today, that even if we adjust for inflation over 400 years, that is probably the greatest trade ever. Apologies to Mr. Paulson in 08. At some point, we grew to shiny pieces of metal, silver and gold, and that was money. In fact, it still is around the world today. A lot of countries still use silver and gold. Silver and gold was kind of clunky, a little risky. You had a little purse of gold coins. You're always nervous about it. So about 1,000 years ago or more, the Chinese came up with the first paper currency and said, you don't have to carry around that little bag of gold that makes you nervous, that can be stolen. This paper will substitute for it. And that was kind of a radical thought. And of course, even today, we still use paper currency. Maybe less and less, but it's still in use. In fact, one of the themes that we want to talk to you about today in this webinar is there's too much paper money, there's too much printing going on, and we probably all need to protect ourselves against the devaluation of the paper. If you go back about 60 years ago, they launched Bank America, came up with Bank AmeriCard, Diners Club, American Express. These were the first credit cards, and it was new to the American public, and they said, wait a minute, this piece of plastic, I can go buy, a couch and a love seat? Yeah, you can go buy furniture or whatever. So it took a while for people to understand that this is money. This piece of plastic has 5,000 of those silver coins in it. So my point is that over time, the notion of money changes, and it's always an acceptance, an adoption, a faith issue. So today, we still use debit and credit cards and wallets, but maybe not for much longer. We're going to make the case to you that this is the new money. These are representations of Litecoin and Bitcoin. There are many others. And we are going to ask you, is this your wallet on the left? You're going to carry around in your pocketbook or back pocket this heavy thing with lots of credit cards in it? Or is your smartphone your new wallet, digital wallet, which we have to learn about? So with that being said, we really need to look at what makes something valuable. Why is money money? What is it backed by? What makes it a store of value? And so the question, of course, is Bitcoin money? Gold and silver are hard to get out of the ground. Van Gogh paintings, diamonds, old Corvettes, these are fairly rare, right? There's a scarcity issue. There's uniqueness. That's the value. And so one of the questions we're going to ask today is, how long can the paper money that is backed by nothing, how long can that be considered a legitimate store of value? So with that preface, I'm going to ask Jose to walk us through. Jose, tell us, what is Bitcoin? What is the blockchain? How does this all work?
Well, I I appreciate it very much, and I think that the audience too, the brief history of money, because it's sort of it goes with it is a conversation of how money becomes even more sophisticated throughout the year and throughout the lifetime of it. And in addition to that, it goes into the topic of scarcity, which we're going to be talking about it incredibly with Bitcoin. So first of all, when you start talking about Bitcoin, you need to start with cryptocurrencies. Cryptocurrencies or cryptos, which are sometimes being referred as, are digital currencies secured by a cryptographic protocol. They have a heightened security level, which makes them nearly impossible to counterfeit or replicate. So that is one of those attributes about money. Bitcoin by itself, it is a virtual currency where an online protocol is used to transfer value using blockchain technology. The Bitcoin itself, using the blockchain technology, is used to transfer the value from person A to person B for exchange of goods and services, or just for the sake of transferring the value. It was first introduced in 2008 after the collapse of Lehman Brothers and the resulting banking crisis, and it emerged as a response to a lack of trust in the international banking system. So it is important to mention that Bitcoin has existed for a while. It is more than 12 years old. In its early life, it had a valuation that it became accepted by individuals, by smaller institutions. You can see how the valuation of Bitcoin started going up. It started going up significantly up until that point in which it started attracting investors' attention. It also started attracting the attention of public exchanges. And then in 2017, we start seeing, in 2016, 2017, we start seeing trusts being created using Bitcoin. We see that in 2017, we have the two futures that are being created by Bitcoin and exchanged in the futures market here in the United States. And then right after that, we see that Bitcoin its valuation sort of goes down and remains stable for a while, up until the last 6 months, let's say, in which its valuation has crept up all the way up to more than $50,000.
That chart there, the 50,000 and change, makes me think. Do you remember that crazy story I told you about the pizza with the Bitcoin?
Yes, and I didn't hear it before. I had to look it up, and it is indeed crazy. Just as I decided to put it here because I think it's very, very interesting, and our audience needs to hear it. In May 22, 2010, a day that is now being called Bitcoin Pizza Day, one of the early adopters offered 10,000 Bitcoins for whoever delivered him 2 pizzas on that day. And I didn't believe it. I went over looking for those threads, and indeed, he made the request. A lot of people started making fun of it, and then at the end of the day, somebody delivered him pizzas, and he gave for those 2 pizzas that 10,000 Bitcoins. And you can even click and see the photos of the pizzas that he received.
So he says, thanks, Jerkos. He gave them worthless cryptos, but those pizzas cost him $560 million about it.
Yes, the story has a flavor of the Island of Manhattan story that you mentioned a bit ago.
Kind of the same. Pretty good trade.
This was a segue. I needed to put this here because it was just incredibly funny.
All right, so let's continue with what is Bitcoin, what is the blockchain, how does it work?
Yes. First of all, whenever you talk about Bitcoin, you talk, as we talked about a moment ago, cryptocurrencies, then blockchain, miners. Miners are programmers that are instrumental for Bitcoin adoption. Miners are spread all over the world, and all Bitcoin transactions are validated by miners. Once a transaction is verified, it becomes a block attached to a previously verified blocks of transactions. The blocks of transactions create a publicly viewable trail called a blockchain. Publicly viewable. Bitcoin is built on a transaction log or ledger distributed across a vast network of computer servers. No one place, a vast network of them.
So Jose, the ecosystem or the blockchain for Bitcoin, what you're saying is thousands, countless transactions are all publicly available on this open distributed public ledger, going back to the beginning.
Yes, correct.
So if we compare that, like how many openly public viewable ledgers are there for the central bank, say the Federal Reserve's records?
I would say one.
One, and maybe it's not so public, and maybe no audits for 107 years. That was a loaded question I gave you there.
It was a loaded question. But it is a very fair question also. Okay. I can imagine that these topics are also a little bit complicated.
Well, that's one of the reasons I mentioned we're going to be offering a Q&A, not at the end of this, but a private session. If you have questions, we're going to offer an opportunity to get on our calendar, and we'll give you a 15-minute consultation and clear this up, because it's new stuff for a lot of people. It's confusing.
Indeed. I think that would be very helpful. Well, moving along, we touched about what the blockchain is, and if you think about it, it is transactions. It is transactions, and a blockchain itself, it is the database that stores the data on blocks that are chained together. So the blockchain technology creates a ledger. That ledger is a word that we're all used to here. A ledger of irreversible transactions in chronological order. The Bitcoin's blockchain is stored across a vast network of participating servers, secure from cyber attacks, and it is publicly viewable. So you must see that there are some similarities to gold at this point. We're talking about scarcity. We're talking about being mined and we're talking about miners. The miner itself, it is one of those things that makes it very, very similar to gold itself, even though that it is a programmer. It confirms the transactions entered into the Bitcoin system. It legitimizes and monitors Bitcoin transactions, ensuring their validity. Miners are paid in Bitcoin for their efforts, so they incentivize and secure the permanence of the system. And they are located all over the world. So competition among miners ensures the efficiency of the system, not a central authority or government. So competition among miners secures efficiency. The fact that they are being paid by them secures its permanence. The fact that it is located across the world and it is not controlled by an individual person or government, it makes it a decentralized currency, cryptocurrency, which ensures its security. Today, there are close to 18.6 million Bitcoins in circulation. New Bitcoins are minted whenever a miner is compensated for their mining service. And there are approximately 900 new Bitcoins mined every day.
Jose, I think at this point, I want to point out, it's not 9,000, it's not 90,000, there's 900, because we're going to look in a minute at the demand coming into Bitcoin, big institutions, big names. 900 a day, that's it.
Yeah, 900 a day. That is a number that it ensures a constant flow, and it doesn't respond to an agenda. It doesn't respond to whatever is happening. It's very monetized in that way. It is 900. And lastly, if you think about it, the Bitcoin protocol itself calls for a total of 21 million Bitcoins to be mined. The last Bitcoin will be mined 120 years from today, a little bit less, in 2140.
Wow. Okay. Thank you, Jose. So let's look at now Bitcoin as an asset class. Let's look at how it is being accepted and adopted by some big names and big money.
So, if you think about it, it is of everything that is happening now. There is big news now every few days. But in the first run-up for Bitcoin in 2017, that was not the case.
What do you mean by that? I see in 2017, late in the year, there was a big run-up, maybe to 19 or 20,000. What was the cause of that, in your view?
So it was certainly big money chasing a big idea, chasing a hot idea, and well, it was certainly pure speculation, which is not what we're seeing today. What we're seeing today is institutions coming in, big money really betting on the permanence of Bitcoin. Yeah.
Okay, but back then it had this peak and then it kind of crashed. Now we're much higher. Is this hot money chasing? Is this a speculation again? Is this a bubble? A lot of people think the ship has sailed.
I don't think so. Not this time. When you analyze Bitcoin and cryptos in general, you have to think of them in terms of gold, in a comparison to gold, because one of the major cases to be made for Bitcoin is that it is a store of value. It is a place where you can store its value as a legitimate place to park your money in lieu of holding it in paper dollars. Just to give you an idea, they both need to be mined. They derive its value from a scarcity. Their supply is not controlled by the government. They both have significantly high volatility. That's why both of them, they tend to be compared Another one is that they both have very low beta. Beta refers to the correlation that the asset has with the stock market. Normally, they have very low correlation with the stock market itself, giving them a great hedging capabilities with stocks and the US dollar. So, reasons for them to be included in portfolios.
Fair enough. I can see that they share a lot of similarities and traits with gold. But when you think about gold, gold is kind of tough to store. It costs money. It's kind of hard to ship around. It's a little clunkier. This is electronic. This is an easier way to hedge, perhaps.
Yes, absolutely. It's very comfortable in the way that you can keep it as opposed to precious metals in general, that they have storage fees, that they have shipping fees. I think that Bitcoin itself and other cryptocurrencies are very their storage capabilities and efficiency is very superior.
The efficiency. So let's get back to this theme of the Bitcoin as a hedge against the dollar, money printing, right? This applies to euros and yens, but this is dollars. So this is an interesting graphic here because this shows $1 million. The guy on the left, he's got like a tea chest of money down at his feet, and that's $100 bills. And if you stack enough of them on a pallet, it's 100 million. And if you stack 10 pallets, that's $1 billion. Keep in mind, that's $100 bills. And here's where it gets alarming to us and why we think everybody needs to hedge. This is a visualization of $1 trillion. Now, the guy is on the left, it's double stacked pallets, a football field long, and that's just 1 trillion. And I think we are, 29 trillion in the hole officially. So you can see our concern with the dollar issue, the money printing over time here. We know that all paper money ends up at the same place eventually, not a good track record. On your left is a visualization of the dollar's purchasing power going back to the beginning in 1913. And it's a few pennies. And we can all kind of see this in person when we go food shopping over time. The same money buys less and less in the shopping cart. And so, I think that's a clear situation, and it may explain some of the headlines that we're seeing. Isn't that your view, that because of the dollar printing, it may be part of the acceleration of what we're seeing with the headlines the last few months?
I do agree, and the fact that it is being accepted and adopted by the big names as a legitimate place to park your money, it does make a lot of sense.
All right, so let's look at some of these headlines because they're really incredible just the last few months. The big news a few weeks back was that Elon Musk and Tesla bought 1.5 billion of Bitcoin in one shot, and that sent it to a record high, and that got other affluent investors taking a look. Recently, the oldest bank in the country said we're going to treat digital currencies like any other asset. We had BlackRock recently, the world's largest asset manager, said, we're going to start to dabble in Bitcoin. We had, let's see here, MasterCard jumps in not too long ago. I should mention this company, MicroStrategy in Virginia. They're a tech player, cloud-based services. The guy who runs MicroStrategy started this really all off about 6-8 months ago in August. He put a big chunk, about $1 billion of corporate cash into Bitcoin. And he's the one all last fall who was telling Elon Musk and Larry Ellison and all these tech guys, you've got to get some corporate cash into Bitcoin. You're going to lose purchasing power. And so we see, we see a constant stream of news. A smart football player says, "Pay me half of my salary in Bitcoin." Miami's going to adopt it and use it in their doings, in their daily activities. The Shark Tank guy, Kevin O'Leary, has gone from calling it garbage to putting 3% of his money in it recently. Visa has stepped in. PayPal allows Litecoin and Bitcoin crypto spending. Fidelity, Morgan Stanley, some really big names coming into the field. And then I think it's interesting, we're starting to see some really big projections in terms of where Bitcoin can rise to. JP Morgan has a $146,000 target, and Citibank has a $318,000 target by the end of this year. Those are pretty, from $55,000 here, those are some pretty aggressive targets, or are they realistic, do you think?
Well, no one knows with certainty, but Citibank, Chase, and other things that it can happen if more institutional money keeps coming in. If Bitcoin is embraced and accepted by more companies or institutions, it can even possibly go higher.
Okay, I mean that's a good point. There's about 10 to 12 trillion of above ground gold right now, and Bitcoin right now is worth about $1 trillion, just hit the trillion mark. And so I think one thing that we should keep in mind is that people maybe under 40, 45, if they have money or access to controlling money, I think they're going to go to the cryptos before they go to gold and silver, generally.
I think that is the case. Precious metals, while having a very long record for being inflation hedges and stores of value, they are a bit clunky. And if you want to hold them yourself, or a bit slower, expensive if you want storage or shipment of them.
Yeah, shipping them around. So if there's 10 or 12 trillion, if we look at that versus $1 trillion in Bitcoin, maybe more importantly, right now around the world there's about 100 trillion with a T, 100 trillion of paper money, globally, backed by nothing, just fiat currency. So the question I think is if we can have 100 trillion of backed by nothing paper in the world, and they can print and print and print it, can Bitcoin and Litecoin and Theta and these, can we get to 4 or 5 or 10 trillion in value for the cryptos within a fairly short period of time? Is that a legitimate question?
It would certainly be the case if there is future continuing a massive flow of capital coming to the cryptos. If you think about how much Apple, Amazon, and Procter & Gamble have of cash in their balance sheets, and given that Bitcoin is truly a global currency in the strictest sense of the word, if you consider all the large corporations in Japan, China, Europe, or the US, if you think what might happen if some of that corporate cash trickles its way into Bitcoin, it would certainly be the case.
I think that's a good point. So even if you think about the amount of corporate cash these days, that yields nothing. Some of it's negative in Europe and Japan. If a trickle of that finds its way into Bitcoin, the price could really explode, even from today's levels.
Yeah, yes, and it can also go down, depending on the news. It is still very volatile, speculative asset.
Yes, it can certainly go down a lot from here, just like the tech stocks and everything else. But I think this notion of the volatility, one of the knocks on Bitcoin is it's too volatile. I don't know if I buy that, because if you think about it, people buying Bitcoin or any of the other cryptos, it should be really, for somebody with 250, 500,000 or more of liquid assets, it should only be, top of the pyramid, a small chunk. So I don't know that the volatility would really cause too much anxiety. The other thing to keep in mind is if you go back to the .com, if you go back to the tech runs, these huge bull markets, when they crashed, the tech crash in 01 and 02 was 80%. Some of them 90, some of them disappeared. So from today's levels, I think we could see the same thing. I don't know. If you look at real estate and bonds and stocks today, they can certainly be volatile as well going forward.
Yeah. I think it's putting it in perspective from today's level. Stocks in general, in their overvaluations that they are, and especially the technology sector, it can fall a long way.
A long way, as can Bitcoin. So I think the volatility knock may be a little overdone. Having said that, if somebody's very conservative and doesn't like that type of situation, then maybe it's not for them. Since we're talking about it, let's see now how Bitcoin stacks up against these other asset classes. So right now we know the stock market, as you mentioned, keeps hitting, it's been hitting highs here. We just hit a 31 times earnings on the Russell 3000, 31 times earnings. That's an all-time high. And we really have not had a serious market correction in 12 years. This is an interesting graphic here. If you look at the blue box on the bottom left, if you go back to the spring of 96, the S&P 500, the 500 largest stocks, that index was at 678. Then we had the big dot-com, the big tech boom. Then we had the tech crash. Then in the middle of the decade, we had another big recovery, big housing boom, stock market boom. And then in 07, 08, 09, we had the mortgage and banking crisis. And believe it or not, if you look at the red box on the bottom right, in March, exactly 12 months ago, 12 years ago, the S&P 500 bottoms at almost the same level it was 13 years earlier. So 13 years of zero. In fact, if you were paying fees on the money, it was a little worse than zero. So we're not predicting that we're going to look at a lost decade or a 13 years of nothing, but from these levels, it is possible. And we need to be aware that historically, I mean, they call them cycles for a reason, right? Nobody wants them to happen, but there are down cycles in the economy and the markets. This is, the last 100 years, it's about every 7 years on average. It's about a 40% decline. The last two, if you look at the top, the last two market crashes, bear markets, were both about 50%. And sure enough, because it's been so long, we're starting to see some pretty high-profile people warning about the stock market bubble. This guy, Jeremy Grantham, is a 40-year veteran managing 115 billion. He has called the last two crashes accurately and is warning about a 50 to 70% crash, which would be just horrific. And so we see, Jose, a lot of the times we see pre-retirees, even people who've recently retired. We're not trying to offend anybody here, but a lot of people have all their money in the markets, maybe a little cash buffer, and they've got everything in stocks, bonds, and mutual funds. And we're politely saying at the bottom there that hoping that the markets treat you well throughout retirement is not really a strategy, and that this may be more of what a pre or post-retirement portfolio should look like. Yes, some red, some pure growth. If you can afford that, great. Cash buffer, the dark green. But some portion of the accumulated capital, right, that has to generate income for life, turn that into safe income producing vehicles, 40%, 50, 60, depends on your risk tolerance. And really what we're talking about today is that little yellow, 5 or 10% chunk of the portfolio should be devoted to inflation hedges, that the precious metals and the cryptos, to protect the rest of the wealth that is all in dollars. So with that being said, so we've talked about stocks. We're concerned. How do you feel about bonds at this time, the bond market?
My opinion about bonds at this moment is very similar to pretty much every other analyst out there. I do believe that bonds are overvalued. And and I agree with almost everybody out there that there is with the expectation that the valuation of bonds is going to go down. As we remember, the valuation of bonds decreases when interest rates increase. And we are at historic interest rate lows. So we believe that interest rates are going to be increasing in the very near future. And with that, they're going to take the valuation of bonds downside. And I am saying this with a little bit of hesitation because we have all been educated, even though that I am repeating pretty much what everybody's saying out there, but we have all been educated to believe that bonds are a very, very good combination with stocks, in the sense that to be able to mitigate some of the risk that comes from the stock market because the bonds are safe. That is not the case. When you see that those increases in prices, you can see a decrease in the valuation of bonds. For example, in this table, it is a very small example, but if you have a bond with a maturity of 7 years, it could lose 20% of its value if interest rates rise by 3%.
Just 3%. That's a good point. I think this is an interesting table here, because I think what you're saying is the average person in their 50s, certainly 60s and 70s, maybe starts to pull in their horns a bit and retreats more to bonds as they get older. And that's, in normal conditions, that's the thing to do. But we're not in normal waters, and interest rates are so low. I don't think, the average person that has some bond funds in their portfolio, they've got, maybe they don't realize it's 7, 8, 10, 15-year bonds in that bond portfolio. And I don't think the average person is thinking that they can lose 30 or 40% of their money in their bond holdings. But from these levels, if interest rates just go up 3 or 4% to normal levels, bonds are going to be painful.
Yeah. Bob, we just went through stocks, bonds. I think that it would be worthwhile to talk a little bit about precious metals at this point. And you have a lot of experience dealing with precious metals. How do you compare them with cryptos? Gold, silver, especially consider, and I want you to emphasize on the situation that we have of all the printing of paper money that is going on.
Well, that's a good question. We're pretty bullish relative to stocks and bonds and real estate right now. We're pretty bullish on precious metals, silver in particular. This is a longer term silver chart. You'll see that 10 years ago, it hit $50 an ounce. It's about 25 to 30 right now. In fact, believe it or not, it hit 50 the first time in 1980. I cannot think of any other major asset that is cheaper than it was 40 years ago. There's a story attached to it. Gold and silver have been suppressed for quite a while. I mean, how could silver be 50 10 years ago? In the last 10 years, Europe and Japan, the United States, everybody's printed an insane amount of money, and silver's half price. So there's some suppression of gold and silver. It helps the central banks and the dollar story if they keep it suppressed. So we're very bullish on silver and gold because they have been proven to be stores of value, like you said, for thousands of years. Having said that, as bullish as we are on silver, we're actually a bit more bullish on, in the near term at least, the next couple of years, on the cryptos. We think they may be because of what's going on here, they may be a faster and more efficient and better form of a hedge against the printing of the paper.
So I think that this is a moment to address one of the questions that we asked at the beginning, which is a question that almost every investor has. Is it possible to hold cryptos and precious metals inside of a retirement account like an IRA or a Roth IRA?
It's a great question. The answer is yes, you can. There are not too many custodians, IRA custodians, who will allow you to hold physical gold and silver and cryptos. You got to jump through some hoops. They are out there. We are very experienced in that with folks doing that. The good news is there's also a number of alternatives that are coming into play here where we can get an exposure a little more easily. The other thing to keep in mind is that cryptos are purchased on an exchange, just like you would purchase commodities or stocks or bonds on an exchange. Cryptos are purchased on an exchange. The difference is, and it's kind of interesting, the commodity markets are only open for a few hours. The stock and bond and mutual funds only trade for a few hours. But the crypto markets trade 24 hours a day globally. The crypto markets never close. Those exchanges are open all the time. And we think that the cryptos can rise a lot. And if that's the case from here, it may be sensible to do it in an IRA or actually even better, a Roth IRA. If there is big gains down the road, wouldn't it be sweet to either through conversions or through purchases to own the cryptos in a Roth?
Oh, that is great financial planning advice over there. I think that a lot of the attendees will benefit incredibly from a conversation on that sense.
We think it makes some sense. It's going to be for a small portion, but it makes some sense. So let's talk about the crypto world as it relates to the paper asset world.
So we are seeing ever paper money printing and issuance of debt. That is happening right now. The whole developed world, it's going on. We are seeing it with the dollar, the euros, the yens. The question is, what happens when you print too much paper money?
Right, and it gets back to this notion of faith. This what makes it valuable, right? What happens historically if you print too much money? Well, at some point, it becomes monopoly money. People lose faith in it. The emperor has no clothes, so to speak. The picture on the bottom left is unfortunately a true picture from Venezuela, the country of Venezuela, which has printed too much money. They are suffering from something called hyperinflation, which I pray never happens here. And that is a picture, believe it or not, of 14 million bolivars. That's the currency they use, their bolivars. 14 million bolivars, Jose, to buy a chicken, if you could find the chicken. How do you count 14 million bolivars to buy a chicken?
You don't count it. You don't count it. The street corner butcher doesn't count it. They weight it. They basically weight the currency.
Wow. So weighing the money, that's not a good, weighing the paper, not too good.
It
So,
is it is very sad.
so all right. So let me ask you then on the Bitcoin front. Can Bitcoins? I think you said earlier they just can't be printed and mined at willy nilly. There's limitations, right?
Yeah, so remember, 900 new Bitcoins per day now. There is a total of 18,600,000 in circulating supply. By design, there is a limited supply of Bitcoin, and when all the mining is done in about 120 years, there will only be 21 million Bitcoins.
And I think that we should point out to the audience that this 18,600,000 of circulating supply, that may not be accurate either, because maybe half the Bitcoins are in tight hands. They're not going to be sold anytime soon. I mean, there may be a lot less Bitcoins available as this big money comes in. And if that's the case, maybe that's where we're seeing these price projections in the hundreds of thousands.
I think that the valuation of 300 and of 300,000 and 150,000 from Citibank and Chase, it is driving from the notion that Bitcoin is a fixed supply. There is a fixed supply of Bitcoin, that we know what it is going to be, not only in 120 years, we know how much it's going to be in the next couple of days. And the demand is spiking. The demand for it is spiking, personal and institutional. So we believe that the valuation, it is increasing on that to that particular rate.
So, okay, but what about somebody who says, what is it backed by? There's still this question: what makes this a legitimate store of value, or is it not a legitimate store of value yet?
So as you pointed out at the beginning with the brief history of money, at one point seashells and beads were accepted as money. Then metal was accepted as money. Pieces of paper, pieces of plastic. Is there anything backing the seashells, the paper, the plastic? Not really, right? It is just an acceptance by the powers that be, and because the public also accepts it, then such and such becomes money. It is a question of acceptance. And now this electronic token that is called Bitcoin, that it cannot be hacked, it cannot be counterfeited, which trades around the world 24 hours a day, and it has a limited supply, is rapidly coming to be accepted as money. That said, a lot of people do not trust it, or even though they don't know how to use it, and because it can be confusing.
Well, if you think about it, it took a while for people to understand how a credit card works. So these things there is a transition period of time. But if you think about it, people are already using Venmo and PayPal. They're going around the banks already. So I think there is a transition that comes. Let me ask you another question. This is an important one that people ask us a lot. In your opinion, can the U.S. government, or for that matter, any government, can they squash Bitcoin and the cryptos? Can they outlaw it, make it illegal, regulate the hell out of it, and so that it loses its value?
Well, first, I am not a legal expert, and fools are born from predicting the future. So you gotta be careful with that. So but that said, we should consider this to be possible. However, Bitcoin has existed for 12 years, more than 12 years at this point, and it is financial instruments that derive their value directly from it are trading in the public market right now. We see trusts that are being created. We see ETFs in Canada. We see a futures that has been in circulation since 2007 in the Chicago Mercantile Exchange, and we also see that the Congress has been looking at it, and it seems that the balance is tilting into the opposite direction of banning it.
Well, and I think in addition to that, you look at Visa, MasterCard, BlackRock, PayPal, billionaires. You look at all this money coming in. You'd have to think that wouldn't be happening if the big money was concerned about a ban or short-term problems.
Yeah, certainly.
So, Jose, let's move to another subject that was one of our questions at the beginning, this notion of a digital wallet. We're all going to have to learn this. Can you tell us what is a hot wallet versus a cold wallet? How are cryptos held? Do you receive a quarterly statement like you do with with your 401k or mutual funds or stocks? Do you pay storage fees like you do for gold and silver? What are some of the mechanics with the wallet?
Okay, it has some similarities, but it also critical differences from your 401k, from your mutual funds, from your brokerage account. First of all, you don't receive a monthly statement. You don't receive a quarterly statement, as it is some sort of value that you own. First, in terms of what is a hot wallet, which is something that you keep hearing also, it means that you are keeping your coins or tokens on the exchange where you bought them. This is not ideal because the exchange is not the most secure location for your money. A cold wallet is one that allows you to hold your tokens electronically, safely, and offline with codes that only you know, so the wallet cannot be hacked.
Okay, so a hot wallet is when you leave the tokens or the coins on the exchange. A cold wallet is when you store them offline where they cannot be stolen or hacked. Gotcha. Okay. We got to think we're really in some strange waters right now overall.
Yes, yes, we are, and it is Bitcoin, cryptocurrencies, but also it is not normal for interest rates to be near zero for 10 years. It is not normal for the stock market to go into new highs every 2 weeks.
No matter what the news is, yeah.
No matter what the news are. Yeah, it is not normal.
Well, if that's the case, should people be looking then at the crypto universe as a viable diversification or new asset class to consider? And if so, is that appropriate for retirement accounts, do you think?
We can see that a lot of very big money and big institutions are now accepting and adopting Bitcoins and other cryptocurrencies. It appears that it is very possible that this great flow will continue as more institutions enter the field. And as institutions, individuals, corporations, they are trying to hedge their dollar exposure and diversify their portfolio. While they are trying to do that, I think that we also need to do that. For this reason, we believe that because they haven't entered yet, we think that it is a good idea and it is still early, even though the valuation that Bitcoin currently has, given the expectations that we have in the future. We think that the average investor of some means should consider at least a small exposure to the cryptos for the same reason that big money does it, to get out of the dollar and for further diversification.
Right. Get some money out of the dollar and diversify. So the role of cryptos in the portfolio, then, we see there are some reasons to be long-term bullish. Maybe there's a big break soon, but we have good reasons to be bullish longer term. So there's serious upside potentially. Still, it's got to be suitable for certain people. Speculative investment, maybe a small percentage of their liquid net worth. But we think that everybody does need to hedge against the inflation and the dollar. And so that's kind of why we did this. We're going to wrap it up now, this presentation. We think that the cryptos can give you, well, certainly they give you diversification. Not too many people own them. Completely different asset class. I think we made that case. Protection, maybe not as long a track record as precious metals, but clearly the big money is trying to get some money out of the dollar to protect purchasing power, protection of the purchasing power of your nest egg. And frankly, if there's good upside, then we're looking at growth opportunities, right?
I think so. And having that said, Bitcoin and other cryptos are not for everyone.
No, certainly not. I mean, look, there may be plenty of people say, look, this is too new, it's too confusing, it's too complicated, I don't understand it, I don't trust it. It looks like a roller coaster to me, that's fine. My counter to that would be, well, from today's levels, is rental real estate, stocks and bonds, are they going to be a roller coaster? So I think, gets back to that volatility issue. And, we've seen some pretty high profile smart folks starting to warn about these other asset classes.
Yeah, certainly. I think that at this point, people need to talk with other people that know.
Well, again, so we're pleased to do that. We're offering a 15-minute consultation, no cost, no obligation. If you are serious about retirement planning, because frankly, we look at the digital assets. Should you have a chunk? Yeah, we think so, but that would be part of comprehensive planning, building income streams, addressing long-term care, estate planning, taxes. So if you fit that profile, let's talk. We'll be pleased to do that with you. You can get on the calendar. And with that, I guess I think we've done our job today. Hopefully we open some eyes and ears and minds on a new subject. Thank you, Jose, for helping me today.
Oh, this was a lot of fun. Thank you for inviting me.
Okay, great. All right, everybody, have a great day.
Bye, everyone.
Thank you.